සුබ දවසක් ඔබ සියලු දෙනාටම. දැන් මම ISL so sorry for that. I think that how to conduct in English medium. So good afternoon and have a nice day to all of you. That I already discussed about the ISLM equilibrium. The initial part we already discussed with relate to the derivation of the IS curve by examining the behavior of the goods and service market, and also we already derived LM curve which relate to the operations of the money market. Right? Through that, we already have understanding about how the ISLM goods and service and the money market equilibrium occurs. Then actually that here onwards that I'm going to explain about the while referring the internal handout also that ISLM equilibrium. I think that this type of in detail handout already uploaded to the LMS that you can refer to enhance your knowledge. And if we consider about the ISLM schedule that actually summarize the conditions that have satisfied in order for the goods and service market respectively to be in equilibrium. In other words, that actually if we draw the both IS and LM curves in one panel, the intersection point, right, intersection point of the IS curve and LM curve will reflect the equilibrium interest rate and the equilibrium income, right? So that that IS curve that we know each and every point on the IS curve will reflect the goods and service market equilibrium, and LM already reflect the each and every points of the money market. Therefore, when both the curves intersect together, it means that we can have the equilibrium points of the goods and service market and the money market, right? So then if we want to change the ISLM equilibrium, so that you know that either by changing IS curve or LM curve, we can have the new equilibrium interest rate and the new equilibrium income, national income. So that if we consider about the shift of the IS curve, so what are the factors? What are the factors affecting to shift IS curve? Right? To shift IS curve, that basically autonomous spendings, right? That autonomous spendings means you know that how we derive the IS curve, that is with relate to the goods and service market, right? Okay. So that IS curve will derive with relate to the goods and service market, right? So goods and service market, why shifting? So why shifting aggregate demand curve, right? Like that because goods and service market, if we do how to derive that this is a 45-degree line, and if we aggregate expenditure curves, then by shifting this aggregate expenditure curve, that we can have a new ISLM, IS curve, right? IS curve. So then how this aggregate expenditure will shift? So that what are the factors affect into this this aggregate expenditure curve, that all the factors similarly affect to shift the IS curve also to right hand side or left hand side, right? So if we consider about the maybe some factors affecting to shift the aggregate expenditure or aggregate demand to right hand side. So then you know that yeah, most of the autonomous spendings that we know that they will not change with the other variables, autonomous expenditures, autonomous. So if we consider about the goods and service market, what are the autonomous expenditures? That we can identify the autonomous consumption, right? Autonomous consumption, then autonomous investment, autonomous transfers, then autonomous exports, autonomous imports. So those are the factors. Those are the factors that will shift aggregate demand curve, and thereby that will lead to shift IS curve also to right hand side. If there are any increase of consumption and also the increase of investment, increase of government expenditure, so definitely will lead to increase IS curve, or that we shift IS curve to right hand side. But if there's any reduction of the lump sum tax, also that decrease of taxes will increase the IS curve to right hand side. So then those are the factors. If we consider about the increase of government expenditure, increase of investment, increase of consumption, increase of export. So those factors will shift the IS curve to right hand side. Then in the other hand, if we consider about the lump sum tax, those things also will affect to shift IS curve to right hand side. Then what are the factors actually that to change? So that we can say that either by changing IS curve or LM curve, right? Here already shows the what will happen to the initial equilibrium if we change IS curve. Then you show that what will happen if we change the LM curve already have positive slope, IS curve already have negative slope. Then we have to label as R and Y. So this is the initial interest rate and the income. Then if we shift the LM curve to right hand side or left hand side, right? So that will be change initial interest rate and the national income. So then what are the factors affect to change IS LM curve, LM curve to right hand side to left hand side, either by changing money supply or money demand, that we can change the LM curve to right hand side or left hand side. So then these are the ways how the equilibrium change may be changing IS curve or LM curve. So to change IS curve, we have to change autonomous expenditures. Autonomous expenditures like consumption, investment, government expenditure, exports, transfers, taxes. So those are we consider as the autonomous expenditure by shifting, by changing. And the shifting by changing those variables, that we can have the new ISLM equilibrium. Then by changing money demand or money supply, we can change the LM curve, because that we derive LM curve, it related to money market, right? Money market. So money market equilibrium will occurs when the intersection between money demand and the money supply. So therefore, by changing money supply or money demand, we can change the LM curve. So that by changing LM curve or IS curve, we can have the new ISLM equilibrium point, and we can show new interest rate and the new national income level, right? Then if we consider about the fiscal and monetary policies, that we can explain by using ISLM model, right? So that what is the impact if the government impose fiscal policies or monetary policies, so what will happen? What will happen to the ISLM equilibrium? How it impact on the economy? If government impose some sort of fiscal policies or monetary policies, how it impact on economy, right? So that here the fiscal policies. Normally fiscal policies implement with relate to the goods and service market, right? With relate to goods and service market. Then the monetary policies implement with relate to money market. So we can have idea about goods and service market and money market, and with the goods and service market is fiscal policies will implement with relation to goods and service market, and there are two ways. The fiscal policies can be implemented as expansionary, right? Expansionary fiscal policies, so contractionary fiscal policies. So normally the government implement this expansionary fiscal policies to expand economy, right? To expand economy, maybe that by increasing consumption, by increasing government expenditure, or by increasing investment. So through that, government wants to expand economic activities, right? The intention is to increase real GDP. But now you can see that very good example, right? The economic situation prevailing in the country now. So that as we know, as we all aware, now government already implement contractionary fiscal policies, right? Contractionary fiscal policies, because you know that our budget deficit, our budget deficit is huge increase, and the inflation rate is gradually increase like the inflation rates. So therefore that governments wants to contract economic activities, so that basically government implement some economic tools, or government use some economic tools to contract economy. right? Likewise, if we consider about the monetary or the financial policies as well, for monetary policies also implement as expansionary monetary policies and contractionary monetary policies, right? Then expansionary monetary policy is made by increasing money supply. By increasing money supply while printing new money stock, then can increase the money supply that we can identify as expansionary monetary policies. Then while reducing money supply, the government can implement contractionary monetary policies as well. Right? Then we see some sort of by using some sort of examples also that how the expansionary fiscal policies implement and the contractionary fiscal policies implementations, right? So that expansionary fiscal policy that you can see, expansionary fiscal policies either by increasing government expenditure by cut taxes, right? So normally that government implement these expansionary fiscal policies through budget, right? How they implement this fiscal policies through budget, right? So maybe by allocating more money on government spending, or maybe by cutting taxes, right? That say for example, if government allocate huge money for the new highways and maybe to build new hospitals, new schools. So likewise, that government can increase government expenditure on new projects. So what happened therefore, the people or the workers may have more money because they already providing, they're hiring their the labor as they're working there on projects, and they can earn more money. So due to this allocation of the money on huge projects, the people can earn more money, and the economy may have more money stock. So that may be lead to increase for goods and services, and industries therefore will manufacture the large amount of goods and services. So then likewise as the circle, right? So as a circle that economic activities will boom, right? Economic activities will boom, then that will lead to enhance the real GDP of the economy. Then we'll see what will happen. If we cut taxes, right? Then government can implement expansionary fiscal policies either by increasing, right? Either by increasing government expenditure or by cutting down taxes, or maybe sometimes can implement both together, right? Both together, so that while increasing government expenditure or cutting down taxes. Then we see what will happen if we cut taxes, So the same thing happen that if we cut taxes, the people will have more disposable income, right? They will have more disposable income, then they will demand for more goods and services, then thereby the industries will lead to produce more goods and services, then the economic activities likewise will boom due to increase of consumption and the investment likewise. Okay. Then so those activities, how those activities operate, which relate to the goods and service market and money market, right? Goods and service market and money market will explain by using this explanation, right? You can see how the government implement the expansionary fiscal policies. The government can either by reducing taxes or increasing government expenditure. So that will lead to increased aggregate demand curve, and thereby that you can write down here, thereby the IS curve we shift to right hand side. IS curve we shift to right hand side, and new equilibrium will occur in the C1 point, and the national income will increase. So up to that point, it explained the activities, the operations which relate to the goods and service market. Right? Thereafter, that will explain the activities or the operations which relate to the money market. So that you know that money, national income and the MT, so the transaction motive, right? The transaction motive already has positive relationship, right? So if we, as per the classical, maybe that you remember under the money demand, under money demand that we already learned, there's a positive relationship between the income and the transaction motive. So if we have more income, definitely we'll spend more on consumption and precautionary purposes, transaction and precautionary purpose. Therefore, MT will increase, right? So that, but the thing is, if we have the constant amount of income, so that from that income, if we allocate more for transaction and precautionary purposes, right? So more portion, the vast amount, if we allocate for transaction motive, there may be comparatively, little amount will remain to spend on speculative motive, right? So that if we have constant amount of income, large part of that income, if we allocate large part for our consumption, there may be lesser amount will remain to invest, right? Invest. That means MT is high, then MSP may be low, right? So that MSP, then the relationship between MSP and R. MSP and R, if there's a reduction of MSP, that means that because of the increase of interest rate, right? Then in other words, it explains there's an inverse relationship between MSP and R. Then MSP, when MSP reduce, that may be lead for increased interest rate. Then how the increased rate? Here explain due to this fiscal policies, how national income increase and how interest rate income through goods and service market operations and money market operations. So that what will happen if we consider about the contractionary fiscal policies? So vice versa of the situation, right? So that here what will happen? So that contraction of fiscal pulses due to the reduction of the uh, government expenditure, right? Contraction will happen, will occur due to reduction of the government expenditure and the increase of tax. So if you reduce on the allocation of the new projects, then you know that the people may have the circular flow of money, right? Circular flow of money may be interrupted, so that people may don't have much money, right? Much money to spend because there's no new projects. So what the thing is now happening, the constructions, most of the constructions are already stopped. Then most of the development projects already stopped. So therefore, most of the people already unemployed, right? They don't have money due to this contraction of the fiscal policies. That means the government decided to not to allocate more money for government projects. Then the circular flow of money may be limit. Then the people may have limited money income. Therefore, they will not demand for more goods and services. Right? So through that economy may be contract, right? Economic activities may contract, and then the real GDP also decrease. Then on the other way around, if we consider about the tax, then now we are really experiencing. So what happened if government increase government tax? So that we know that the people don't have money to spend, to consume goods and services, right? Goods and services, therefore, there's a little demand for goods and services, and industries will not produce more goods and services. Likewise, that may be lead to contract economy as a whole, right? So then if we consider about what happened by using the same, explanation, the government will increase, right? The government increase taxes and decrease government expenditure, right? What will happen? Government decrease taxes or government decrease government expenditure or increase taxes. So if we decrease government expenditure or increase taxes, that may be lead to decrease aggregate demand. If decrease aggregate demand will decrease national income, then we know the national income and the transaction motive already have positive relationship. Then MT also decrease. MT decrease, then there's an inverse relationship between MT and MSP. MSP increase, and inverse relationship or negative relationship between MSP and R, then the R will reduce. So likewise, that we can explain the contractionary fiscal policies. Then if we consider about the monetary policy, right? Monetary policy, so that will directly impact on money demand, right? money demand, then what will happen? If we consider about the monetary policies that will directly impact on the money demand, LM curve, right? LM curve, right? The monetary policies have direct impact on LM curve. By increasing money supply or decreasing money supply, that we can change the LM curve to right hand side or left hand side. If government implement expansionary fiscal policies by increasing money supply, definitely the LM curve will shift to right hand side by reducing interest rate and increasing income. Then if government decided to decrease money supply, how it affect to LM curve. The LM curve, this is IS curve, then definitely we shift LM curve to left hand side while increasing interest rate and reducing national income. So likewise that we can explain the impact. Then maybe sometimes, most of the time, that I already evaluate the knowledge with regard to this fiscal and monetary policies. Maybe that what will happen by giving this sort of example. If you go through the previous exam papers, that you can see there that maybe sometimes I ask if the consumption increase, what will happen? Then if investment decrease, what will happen to that new ISLM equilibrium? Then maybe sometimes not only this with regard to this fiscal and monetary policies, maybe that by using some practical situations that we'll check, right, by using ISLM model, that you have to explain. If I ask questions like this, without directly giving the increase of consumption, likewise, that maybe sometimes ask due to this, so for example, consumption reduction, right? Consumption reduction due to this economic crisis. Due to this economic crisis, that the consumers will decrease their consumption, right? So then what will happen to the ISLM equilibrium? So that the consumption directly have an impact on the IS curve, right? So if there's a reduction of the consumption, so that will LM IS. So that what will happen? The IS curve will shift to left hand side, right? Then I have to write down what will happen to the initial interest rate and the national income. Then if you consider about the second one, then government wants to enhance the economic activities while allocating more money on new highways and to build new hospitals or new schools. Then what will happen? So that also have an impact on goods and service market, that will lead to shift IS curve to like this, shift IS curve to right hand side while increasing interest rate and national income. Then due to this COVID-19 situation and global economic crisis, so most of the investors reduce the investment on investment portfolio, right? Then like this is, if I give some sort of practical scenarios like that you have to show what will happen to the economy by using ISLM model. So that also directly affect to IS curve, and IS curve will shift to left hand side by reducing interest rate and national income. Then all these three affect to the goods and service market, but if we consider about money supply, so money supply, decrease of money supply, you know that the money supply will affect to LM curve. LM curve. So then what will happen? The LM curve will shift to due to reduction of money supply. Due to reduction of money supply, the money LM curve, the LM curve will shift to left hand side, right? So initial interest rate and income, then due to reduction of money supply, what happened? The LM curve will shift to right hand side while increasing interest rate and decreasing national income. So likewise, then if I explain, if I give some sort of practical situation that you have a good understanding about the economic impact by using ISLM model, right? So that then we'll move to identify new concept, right? So that is about the crowding out effect, right? So the crowding out effect that you can see, crowding out effect that may be occur only if we implement, or the government implement, expansionary fiscal policies, right? Expansionary fiscal policies. So if government implement expansionary fiscal policies, then only the crowding out effect will occur. Right? So that what will happen? So what does mean by the crowding out effect? When the government increase its expenditure with the hope of, with the having idea of to enhance national income, but due to the increase of interest rate, that may be lead to demotivate some private investors, right? Private investors, therefore, due to increase of interest rate, the private investment may be decrease. So even though the government expect to enhance the government income, that expected level cannot be achieved due to increase of interest rate and the demotivation of the private investors. So that amount we identified as the crowding out effect. Okay, crowding out effect. So that again I will explain by using this graph. Okay, by using this graph, so that the crowding out effect will occur only government implement expansionary expansionary fiscal policies. Fiscal policies, right? So that government will increase the IS, yeah, due to due to increase of government expenditure and reduction of taxes, you know that IS curve will shift to right hand side. Then government expect to increase from this much of here that initially have Y1 level, expect to increase up to Y2 level, right? Y2 level of income, this much of income. But the thing is you know that due to shift of the IS curve, the new equilibrium occurs here. That means the interest rate already increased. Then what happened? Due to increase of interest rate, the sum amount of the expected income will crowd out, right? So that government can increase income only by Y3 level, right? Y3 level. So this amount we identified for the crowding out effect, right? Crowding out effect. So then think while having, right, there may be different ranges, right? Different ranges of crowding out, that no crowding out effect, full crowd out, then the less crowding out effect and high crowding out effect likewise, and the effectiveness of fiscal and monetary policies. But yeah, not only the theoretical explanations, in this time that you have to have good understanding about the calculations, right? So that not like the previous is definitely for your exam and this time that you should have good understand about the calculations, right? So by using the IS and LM curves, LM functions, right? By using IS and LM functions, so how can we calculate the national income and the interest rate, right? So here already given the functions which relate to here that you can have idea about. This is related to goods and service market, right? Goods and service market. By using this information, we can derive IS function, right? IS function. Then here already given information, this MD, money demand, right? MD, money demand, and this one is the MS, money supply. So by using this money demand and money supply with regard to financial market, we can derive LM equation, right? LM equation. So then by equalizing LM curve with IS curve, we can have idea about the ISLM equilibrium, or maybe sometimes by subject to one variable also by substituting to that variable into one equation also we can calculate, right? We can calculate the ISLM equilibrium. Here that actually use the second method, right? Second method by that, that you can have different way of calculations, maybe that you already learned, right? Different to calculate in different way. So that anyway that maybe sometimes by equalizing IS and LM also that you can calculate ISLM equilibrium over the national income and interest rate, or maybe sometimes like by following this method also you can calculate, right? So here that if we first that we can derive the IS curve, right? So that this is the with relate to closed economy. The C already consumption. C means consumption. And I means investment. And G means government expenditure, right? Government expenditure. So these things already given. Then by summing up those three together, that we can have the national income. So you know the up to here, 200 plus 0.2 YD. So YD you most you know the YD means disposable income, right? Disposable income, even in national income also. So national income also you already get used to calculate these things, and the only different here the investment, right? Investment maybe only change, right? So that may be change with the we call it the interest rate, right? So if we consider about the YD, that how we calculate the YD from our income, that we have to reduce taxes. We have to reduce taxes and we have to add transfers. But in this calculation, not given transfers, therefore consider only about the taxes, right? Taxes. Then how we calculate the YD? How do we calculate the YD? 2.2 pi minus YT. So this is again the I, this one is J, right? Then if we simplify 0.2 pi Y and 0.2 pi T, right? Then if we further we can simplify, if we substitute this next step, already substitute instead of T, that we know the value for T is equals to 200, right? That is equals to 200. Then if we simplify further, the numerical values 200, my here 25 into 200 means minus 50. Then 150 and 150 is equals to 300. 300 and 250 means 550. Right. Then if we get together, if we add together the y values, so y values 2.5y, 2.5y equals to 2.5. Right. Then here the single I value, so that we calculate that 1000y. Then further we can simplify the 0.5y. If we remove, if you take this value to left hand side, y minus 0.5y. 0.5y means 0.5y, right? Then the 500 and 1000y. So this is the IS. This is the IS equation, right? This is the IS equation. Then by using the values, for money demand and money supply. Money demand and money supply. Here the money supply, money demand, that we can have the LM curve, right? Then LM curve, you can see here. So that 600 minus 2y minus 8000. So that if we shift 8000 to this side, the sign may be changed, right? Sign may be changed, and 2y minus 1006 will remain. Then if you want to take the equation, if we can rewrite the equation by subject to I, subject to I, then we want to divide all the values from 8,000. If you want to take the I equation, then we have to divide both sides from 8,000, right? So that you can see, if we divide from this part also from 8,000, this also from 8,000. So then remaining here y divided by 4,000, and if we divide by this one, this may be equal to 0.2. This one may be the LM curve, right? LM curve. So then now that we already know, we already derive IS curve and the LM curve. So that if we consider about the IS curve, right? IS curve, this is the value for IS. Then instead of this I, we already have an equation, LM equation, subject to I. So that this is the value for I. So then while substituting this I value to IS curve, we can have the value for national income. Here this is the IS curve, y is equal to 1,000 minus 2,000. Instead of I, that we can substitute the LM equation, y divided by 4,000 minus 2. Then if we calculate, if we simplify, that we can have the value for y as 1,000. That we have to remember here, this is one method, right? But if you derive LM equation also subject to y, so that means as a y equation, then that you can equalize both IS equation with LM equation. Through that also, right? Through that also, without substituting it as I equation, you can derive the IS and LM both equation as a y functions, right? As y function, then what you have to do, that you can equalize IS equation with LM equation. Like that way also you can calculate national income and interest rate, right? So that also okay. So then maybe that the value what we receive for national income, right? Value for y, that by using to LM equation, by substituting this value 1,000, that we can have the national income, equilibrium, right? Equilibrium interest rate. So that is equal to 5%. Then further to that maybe can ask, now our answers from B, find the values for. Now find the values for consumption and investment in this equilibrium, right? Then what we have to do, now you already know the value for y, right? You already have idea of the we already calculate value for y substituting that to consumption function, right? Y substituting that y value to consumption function, right? So that is 200 plus 0.25 yd. So that yd means y minus t. So that we know the value for t is equals to 200 and y value we calculate as 1,000. Okay? So that we can have the value for consumption. So likewise, we can have the value for investment also. And by taking into considerations the investment function, given investment function, that we can substitute values, right? So we already calculate y is equal to 1000 and I is equal to point, that means 5%. 5% means, so if we take that 5% as a decimal values, right? So that we can rewrite instead of 5%, that is equal to 0.0 0.05, right? 0.05. So then here that by multiplying these values, that we can have the value for I. So that we can actually confirm, we can verify, right? The figures already right by using the identity that you know that we already have the value 1000 for our income, right? So the national income with related to closed economy, related to three sector economy, how it comprises with the consumption, investment, and the government expenditure, right? Then while substituting values for consumption, investment, and government expenditure, as consumption is equal to 400, we already calculate. I is equal to 350, we already calculate. G 250 already given. Then while summing up the values, we can have the value for national income, that is equals to 1000. So that means our calculation is 100% correct, right? And then further to that, so that we can add another question. So like this, that here, now we can ask, the earlier is actually the money supply. So money supply is equals to 1600, right? 1600. Then now, right? Now that we can change the money supply value, right? The monetary expansion takes the form of an increase in money supply. This rises from 1600 in the original model to 1840. So that you know that this increase of money supply will directly have an impact on LM curve, not the IS curve, right? So that we can keep the IS curve as it is. Then we have to recalculate, right? Recalculate only the LM curve, right? Only the LM curve, because now the money supply already changed as 1084, right? So here, therefore, that we can recalculate, rearrange this equation LM curve as 8000I plus 2y. 2y is equals to 1008, right? 1008. Here. So that money demand is now money demand is equals to 2y minus 8000y, and here that we can equalize with money supply, that is equal to 1840. Then we can rearrange the equation 8000y equal to 2y minus 8084, right? With object to I, that we can divide all the value by 8000. Yeah? 8000, then y divided, maybe that the equation we can have I divided by 4000 minus 1840 divided by 8000 mean if we simplify further, we can have the value 23 divided by 100, right? 23 divided by 100. Then we can substitute. The LA, only the LM curve will change, but the old IS relation remain unchanged, right? Then the IS curve equal is y is equal to 1000 minus 2000 I. Instead of I, we can substitute the value y divided by 4023. Yeah, 23 divided by 100. Then by simplifying the values, that we can have the new y, right? New national income as 1040, right? And by substituting the values, y and r values to the LM equation, that we can have the value for interest rate, that is equals to 3%, right? Equal to 3%. Then again, that likewise, that we can continue, right? That we can continue that what is the new value for consumption and investment. So that here again, that we can have by substituting consumption function and the investment function, we can have the values for consumption and the investment as for 410 and 380. Then again, we can clarify, right? We can clarify whether that the calculated value, what are the values that we received as consumption and investment also correct, and at the same time, by adding all these together, all values together, we can have idea about whether the income, the calculation of income, what the value we received as national income also correct or not. So then by adding consumption, investment, and the government expenditure, that we can have the value for income as 1040. So that means correct, right? And again, here that you can see, then the fiscal expansion, the earlier already have the monetary expansion. So due to monetary expansion, that money supply value increased from 1006 to 1840. And now already add another question while mentioning due to fiscal expansion, right? Due to fiscal expansion, now what happened? Due to fiscal expansion takes from of an increase in government expenditure. Right? The government expenditure will rise up 400, right? 400, and the money supply is back at its original level 1006. So that means no need to change. That you have to, if there's something past add like that, that you have to clearly have a clarification. What about the other things? Here actually you have to concern what happened to the LA. So here clearly mentioned that you have to take the original. original value for LM, that means 1600, right? So therefore that you don't want to change. Now, no need to change the LM equation, right? LM equation, but you have to change the IS equation, right? While substituting. Instead of the 250, that you can recalculate the IS curve while substituting the value 400 for 250. And then you can recalculate like this the IS equation. So now IS equation is change as 1004 minus 2000i. So but LM will not change, and that you can substitute the value what we received for I. Right? Then you can have the Y value as 1002 and interest rate as 1000, sorry, 10%, right? Interest rate as 10%. Then again that you can calculate values for consumption, investment, and already given, not the 4000 here, actually 400, 400. So that what is the value for Y? For 50, 350 and 4000 is equal to 1002. So that means what the value we receive for national income, 1002. Then I think that you already have good understand about the calculation of goods and service market and money market equilibrium, thereby how to, right? Then how by write down this equations, right? You can calculate by using both methods. That means if you wish to follow that by getting the Y function, that you can use that method also. So that better to have some sort of definitely that you have to do some calculations, right? You have to do some calculations with relate to the ISLM model. So that I think that now maybe that you are getting ready to do the exam. Therefore, better to practice, right? So there may be so many examples that if you can go through that net, you can find out so many tutorials, so many examples which relate to ISLM calculations, right? Then first what you have to do, that you have to derive the IS equation and LM equation, maybe sometimes by substituting or maybe by equalizing both functions together. You can have the value for national income and interest rate, right? Interest rate. So then I think that maybe you already have good understanding about calculation of the ISLM. Please practice that. And until we meet again from like this session, good luck for all of you. So best wishes for your examination. So thank you very much for the attentive listening.